Good morning, good afternoon, good evening, and welcome to NestCast Live. It's September 24th, 2020. My name is Jim Chu in San Francisco, California, and our goal with NestCast Live is to have an open dialogue about topics relevant to investing and entrepreneurship in emerging markets. We want to hear firsthand from those who are investing and innovating in the Global South, and we hope to provide a platform to their voices and experiences so that we all benefit. Thanks to technology, we're able to involve audiences from around the world through an interactive session via Zoom. And when I say interactive, I mean we want to hear from you in the audience. This isn't a webinar, it's an open Zoom meeting where you can all participate. So please make sure we hear your opinion by writing in the chat box. Do note that this conversation is recorded and available after the show on YouTube and as a podcast. You can find links to these and more at findthenest.org. Before we get started, a few quick announcements. Please join us on Wednesday, September 30th for another episode of the Nest in French. And on October 1st and the 8th, we will have 4 more interesting companies from sub-Saharan Africa, mostly in fintech. So you'll find more, the links for these meetings at findthenest.org, so we hope to see you there again. If we can go to the next slide. So as I've said before, we want to hear from you. We've left this forum open on purpose for questions and comments, so use that chat box, talk to others watching the show, ask questions, and make your view known. We will do our best to bring audience comments and questions into the conversation. But also, if you're not speaking, please keep yourself on mute so that we can all hear clearly. In the meantime, introduce yourself, tell us who you are, what you do, which country you're from, and your opinion about today's topic. All right, over to the panel today. We're very, very fortunate to have a group of investors working throughout Africa. I know they have a variety of experiences and opinions, so let's jump right in. Robley, would you like to start with introductions?
Good morning, everyone. My name is Robley Muse. I'm calling you from Seattle. I'm CEO of Transalytics, a fintech-based startup focused in Africa. And also I'm the author of the book Unsilicon Valley. I want to qualify, Unsilicon Valley is not anti-Silicon Valley. I just wanted to explore all alternative ways of building startups outside of the Silicon Valley tent, because a lot of us find ourselves outside of the tent and the rules are quite different. Thank you.
Thank you for that. And I think it's interesting to note that this topic actually came out of one of our first conversations that we had when we first met to discuss participating on the Nest. And you had mentioned that you had written a book and had coined this concept of zebras. So we definitely want to hear about zebras in a bit. All right, over to you, Sam.
Hi, everyone. I'm Sam Ajadi, calling in today from London. So I work for the GSMA. And so the GSMA is an industry body for mobile operators globally. Part of what we do is actually within our Mobile for Development arm is that we provide funding to startups in Africa and Asia Pacific. To date, we've worked with one of our programs, Ecosystem Accelerators, worked with 20 startups on the African continent, providing grant funding to these companies. And so we would, I'll be sharing some of our experiences and really chipping into the topic.
So I'm curious, of the companies that you have grant funded, how many of those have become venture-backed companies that have gone on to further rounds of funding?
Yeah, I don't have the specific number at hand, but we've been able to, so to date, we've worked on this program for 4 years, and 188 million, which we refer to as crowding in funding, has come into to 34 Africa and Asia Pacific companies. Most of this are venture-backed, so venture capital funding. And the model at which we work with, which I'll talk about or expand on later, really looks at how we can bring in VCs and other investors into the space as well.
Gotcha. Great. Fabulous. And Great. So Brenda, over to you.
Awesome. So I'm Brenda Wangari. I work at Village Capital. We are an early stage investment firm. We run sector-specific accelerator programs for entrepreneurs all across the world. And we've done this for the last 10 years globally. And in Africa, this is our 8th year. So we focus, the 5 sectors that we've been focusing on have been education, health, financial inclusion. We also have agriculture and clean energy. And we also do provide capacity building for other entrepreneur support organizations. And we've been doing this in Africa for the last 4 years. So I'm happy to be here to share what we've been doing on the continent, what we've been able to achieve so far. So thank you for having me.
Great, thank you. And I hear that you have, or Village Capital, I should say, has an interesting peer selection model for selecting enterprises. So eager to hear about that. Great. All right, so over to Stephen. Hi, Stephen.
Hi, how are you doing? Good evening, good morning, everybody. I'm calling from Nairobi. Here it's 7 p.m. in the evening. And so what I do is I do 3 things. One is I'm an angel investor. I helped set up Kenya's second angel investor network called Victoria Business Angels Network. We've been investing in tech-based companies. We currently have 5 syndicated deals, and our angels have done in excess of 20 deals. Out of those, the syndicated ones, we've gotten 3 venture funding after that. And for our angels, I think at least 10 of them have gotten some additional venture funding. I'm also an entrepreneur. I run an advisory business called Investia Africa Limited. And I teach at Strathmore Business School, and I teach private equity and venture capital. And so I found this topic very interesting to participate in because there's that question of whether there's a right model or there's a right fit for the venture capital model. Thank you.
And I understand that you also wrote an essay in the book Digital Africa about specifically this topic. Is that right?
Yes, it is. And I'm going to share a couple of thoughts from what we did back in 2017.
Great. Thank you. And last but not least, Ahmed, honored to have you join us.
Thank you. It's a pleasure. I've been funding in early stage tech since the late 80s. For the last 15 years, focused in Egypt and the Middle East. I do a couple of things. We have a VC fund that invests in Egypt, Tunisia, and Morocco, Saudi Ventures. It's a $70 million fund. We have a startup accelerator called Flat 6 Labs in 6 countries, expanding to most of the major Arab capitals and hopefully in the next few years to other parts of Africa. And we have a couple of campuses that are kind of like a WeWork, but with better economics. And we took over half of the American University of Cairo campus in Tahrir Square. It's about 25,000 square meters, turned it into a tech park. And those are the 3 things I really spend most of my time on. And the last thing is I founded the first tech company that I was actually the founder of 7-8 years ago. It's a online education home tutoring for the Arabic school curriculum. We do about 5 million kids every school year watching videos rather than parents paying for tutors to come home because the schools are pretty dysfunctional in our part of the world. And I spent most of my life in Southern California, moved to Egypt 15 years ago. So from high school till age 50, I was in Southern California.
Well, as a Northern California, I apologize about that.
That's okay.
So I'm curious, you mentioned that you are starting to invest in other parts of Africa. Are there certain regions that you're focused on outside of Egypt?
We have not started. We're planning on it. And I think the 3 logical places will be Kenya, Nigeria, South Africa for us to start.
Gotcha. Great. Well, great. Welcome all the panelists for joining us. You guys have a wealth of knowledge on this topic, so we'll try to fit in a lot of your insights into this next 50 minutes. So now over to the topic: is the venture capital model the right model for Africa? The success of technology startups, especially those from the US, has become almost legendary. So it's not a surprise that whether through muscle memory or through deliberate choice, we've copied and pasted the model for investing in other areas: impact investing, investing in Africa, etc. Well, I think the question is, does it work? Is it right for investors? Is it right for African entrepreneurs? Is it the right kind of investment that Africa needs for economic development? Are we setting ourselves up for failure, or will we see an even bigger tech revolution in Africa? So this is an open conversation, so who would like to start?
I can go first.
Thanks, Brenda.
Cool. So this is a difficult conversation because the VC model was not built with Africa in mind. And that said, the VC model could be a fit in some instances, but businesses in Africa range from SMEs to the tech startups, who all need different kinds of funding. And majority of businesses in Africa are actually SMEs. So VC funding is not a match for them. And we also don't have anywhere close to the amount of capital that is available in other VC markets. And so it makes it a bit hard to make this comparison, but could VC money obviously work for tech startups? I think possibly yes. And we've definitely seen an increase on funding that is going to tech startups on the continent. So as much as the market is undercapitalized, there is something that is working, and I think that's something worth celebrating.
So what I hear is that you think that there is applicability in a portion of the market, but perhaps there's a much greater need.
Yes, definitely.
Okay, great.
So maybe I want to chip in. I agree with Brenda. I mean, for me, I believe there is room for VCs and the VC model in Africa, but it should be one of many financing options for entrepreneurs. The issue I have with the VC model, not only in Africa, but also in the US, is that the Silicon Valley model has mythologized the VCs as the gatekeepers to startup success. And this, in fact, is not the case. Actually, 70% of VC-funded startups fail. But the issue that has come up with regions adopting Silicon Valley model is that there's an entire infrastructure of accelerator programs and boot camps that have been created to funnel startups to VCs. The issue is those lessons are not always right for mid-sized companies, for companies that do not fit the VC model of hockey stick, 10x, and unicorns in the making. And so for me, I'm really advocating for a complete relook of how to democratize innovation and to allow, how can we profitably finance smaller companies that don't have 10x return? Is it revenue-based? Is it others? And this is a new trend which is coming up in the US, and there's a lot of companies that are, and investment options that are coming up, lighter capital, there's one called Tiny Seeds. They're rethinking how to invest in startups.
So I'm hearing a common theme among two of you now, which is, smaller, more, if you will, traditional companies, SMEs, need a different form of financing. Okay, great. Stephen, I think you have something to say.
Yeah, thanks. And I do agree with what has been mentioned already, but maybe just to split the question a bit, right? So does it work? Does it work for who, right? So there's the investors, there's probably the entrepreneurs, and there's the ecosystem. So if we look at it from an investor perspective, the research we done in 2017, where we asked that question and we spoke to several investors, pointed out to the fact that it was not working very well for investors. And the question, the reason behind is that if you imagine the whole staircase of funding, starting from family, friends, going to angel, going to VC and so forth, till the listed companies, the IPOs. if you look at that, we don't have that staircase in Africa. Most African markets, you don't have that staircase. So you've come in, you've planted something in the middle, but then as a VC investor, you're being forced to really come very early to pick companies. But yet you have a fixed amount of time to turn them around and to generate a return. And you're being forced to stay. And ideally, for you to generate return, you'd have to stay with them much longer. So from an investor perspective, we found that was one big challenge. Then there's also the issue around just the fund economics, right? And based on our research, we found that if you don't have a fund that's at least $30 million and you're doing sort of like regional deals, so you can't be in one country only unless you're doing maybe South Africa, Egypt, Nigeria. But when you go to the rest of Africa, you have to do probably 3-4 countries. And so the fund economics don't work with a very small fund. And there's a number of those kind of small funds. If you move into the entrepreneurs, again, it doesn't quite work as effectively. And the challenge behind that is also VC as sort of like interpreted in Silicon Valley is very different here. You have a lot of DFIs who've put in money and foreign investors. So, and I think I read some reports around 70 to 80% of the funding in most venture capital funds, at least in East Africa, are coming from foreign investors and DFIs. Now, DFIs do not understand what VC is because they come in with the impact metrics. They sort of like don't go for that, high risk, high return model. It's, a bit of risk, then there's a bit of impact, there's a bit of return, which then dilutes that model to a certain extent. And so for an entrepreneur who comes in and sort of like they're just saying, let's scale, let's go across Africa, let's focus on the numbers only, they'll always find that there's additional expectations from the investor. And so to that extent, doesn't work as well. And then maybe just the last point, and then I'll close. From an ecosystem perspective, the fact that a lot of funding has not yet come from the continent itself, that is coming internationally and so forth, has meant, especially if I look at East Africa, that the funding is not going to local entrepreneurs as much as you'd expect that to happen. And it's going a lot to expert entrepreneurs. And that has its own challenges in terms of, is the capital getting to the right people? So there's a lot of improvements that could be done around the VC model. Thank you.
Yeah, I'm just to quote a statistic from Village Capital from Brenda's organization done a while ago, and we quoted this on the last NestCast Live. Close to 90% of all venture funding in East Africa goes to international founders or international entrepreneurs. So that's a high percentage, just to reiterate that fact. But one thing that you mentioned that's quite interesting is the involvement of impact investors and DFIs. DFIs, in my mind, are a certain form of impact investors. And we're essentially using a venture capital model to do impact investing. I think that's, to your point, a very questionable approach. So I'd like to hear from Ahmed, because I know you've done a tremendous amount of work or a tremendous amount of investing through a VC model. What are your thoughts on this?
So I'll run through a couple of things quickly, and just the VC model worked very well before anybody thought of accelerators. And because accelerators came into being because the cost dropped substantially. I started my first incubator in '98. It's called NetCubator, right? It cost $1 to $2 million to put up a website. And that was, didn't make sense. There was very few of them around the US. However, when the cost dropped, it made sense for lots of them to start up and really, launch companies for $20,000, $50,000. In Egypt, I can tell you we did everything backwards. I went to Egypt and said, I'm going to set up a VC fund. And I set up a VC fund, and I didn't have any flow of companies. So after setting up the VC fund, I went down, we set up the accelerator. And after we set up the accelerator, we realized that the companies were just kind of flying off and going into different directions. There was no focal point, and we created the campus to be the focal point. So we actually did things completely backwards, the wrong way. And a lot of the points that are being raised as the deficiencies of venture capital are valid if you look at venture capital as a cure-all. But it's not. As somebody said, it's one spot in the curve, right? I started with that one spot and realized that everything before me was non-existent. So we had to build that. And before the part that I was trying to attack, and that's the most, for me, the most fun, enjoyable part. Another comment on local investors, agree 100%. Our fund is we worked really hard, and we're the first fund in Egypt that has 5 of the top institutions. So about of our 70 million, 30 million is local institutions, Egyptian institutions. And it's the first time Egyptian institutions have really invested kind of in bulk like this in that fund. And 40 millions from foreign DFIs. Just as a quickie for DFIs, the ones we deal with are very, very sophisticated. They're tremendous value added in how we conduct our business and holding us to the highest standards and in improving what we relay to our portfolio companies to improve the ecosystem. So I have to really commend them in the standards and the high standards they bring in to countries where sometimes there's a bit of chaos. And then
Gotcha.
the last thing is our accelerator is set up in 6 countries. In every single country, we've gone through the pain point of setting up a local fund. Each one of them is a local fund. We go through the brain damage and the headache of dealing with the regulator and sometimes get delayed over a year to set up the fund to make sure that it's possible with the regulatory framework they have to set up a local fund that works for funding startups. And we get the regulators to tweak. So the idea is to try and change the ecosystem and improve it as you're making your investments.
So when you talk about this ecosystem curve or the curve of the different companies involved, at least from your experience in your model, what do you think is the ideal profile of the company that works for your model in your regions?
I think it's, I would say the dollars are different, but the curve is the same, right? Okay. I think, you know, if you take a 0 off whatever you fund in the US, you find you're funding the same thing in Egypt at the same stage.
So
right?
Highly scalable,
exactly. That's what we're looking for. And to Brenda's point, we're not looking as a VC firm. It's not our role. We have not defined our role as solving social problems or funding SMEs. We defined our role as funding high growth companies for several reasons. High growth companies are the ones that create the jobs. One of our companies, over its 10-year cycle, 160 founders left and started new companies, 160 employees, because they had seen what a high growth company looked like, right? So one really successful high growth company has a cascade effect that transforms an ecosystem. And the last point is the biggest thing that was missing in Egypt that I think is missing in most of Africa, which is why foreign founders get funded, is the entrepreneurs that did not happen 20 years ago. Where are those guys to be the mentors of young people to bring them up? They didn't exist, right? Where are the 50, 60-year-old successful entrepreneurs who are now angel investors? There's a few of them, handful. You can't, I mean, in all of Africa, you probably can't find more than, 50. It's crazy. Those guys that started these tech companies that were successful or scaled or did something that are now giving back. And same as in the US, people sit with, you see all these personalities that take people under their wing all the time. So that's really why, that's what makes me optimistic, is the generation of the people like the ones on the call today in 10, 15 years, they'll be doing what that role that's missing that people my age should have been filling in.
So Robley, you obviously have something to say. It sounds like everybody has something to say. So
yeah,
please.
I would have to respectfully disagree with Mr. Ahmed. I did an article on this in Kenya, and a white American founder has 50% chance, more likely to get funded in Kenya than in the US. And I actually did a study on who these founders are that are moving to Kenya. A lot of them are straight out of college with no experience. And most of them are not technical. And
I don't disagree with that point, by the way. If I disagreed with that, I apologize. I do not disagree with that point. That is wrong, okay? That's 100% wrong. I'm not justifying that at all.
So yeah, but I'll give you the makeup and the reason why I feel, and this is unique to East Africa. If you go to Nigeria, I think the numbers are better. If you go to Egypt, the numbers are better. But in Africa, in Kenya specifically, we're talking about as village capital, 75% are white founders. The reason
90.
I believe that is the case is because these entrepreneurs have a better way of articulating unicorn-esque type projects. They have no personal and experience with problems that are happening in East Africa, but they are pitching the Uber of Africa, the Airbnb of Africa. These are not kind of, very creative ideas.
Well,
it's appealing for lazy VCs, I should argue.
So I think, supporting what Ahmed is saying is that, perhaps some of these founders are coming from ecosystems where there is perhaps they're more accustomed to seeing these, as you say, Robley, unicorn companies, and more accustomed and being part of that ecosystem. So maybe they haven't had the experience, but because they have the unicorn dreams, they are pitching the unicorn ideas.
But
Sam,
I need to clarify. Don't
yes,
interpret
please.
my comments to disagree with anything you said, Robley. Okay? Your complaint is front and center. I agree 100%. All right? And there are VCs who are lazy and sloppy.
Yep.
Right? And there are people who are just pure freaking racist. All right? I'll fund, the white kid is the one I'm going to fund. And maybe some of them are sitting outside. And in Silicon Valley, right? They're going to throw some money here, and I'll throw a little bit in this country. I'll throw a little bit in this country. Okay. 100% agree with you. I don't, that is not a burden that should be placed on the concept VC for Africa. I think VC for Africa in Africa by people in Africa. I hate parachute VC, right? If you're going to do parachute VC, you're going to make a lot of mistakes. You're going to screw up valuations. You're going to, put some dysfunctionality in the system. But I want people on the ground. I moved. I packed up 15 years ago and moved because I thought that was the right way to do it. So I'm with you 100% on those points.
And by the way, one of the conclusions, at least that I drew from our discussion last month on this topic of race and entrepreneurship in Africa, was that we really do need more local investors that, to your point too, Robley, that understand the local problems, understand the local needs of the customer base. And so I'm very excited, and it's just amazing, Ahmed, what you've done in basically building the ecosystem from scratch in each one of these countries. We need more of those, that kind of work in all the countries throughout Africa. Sam, Stephen, thoughts? I know you guys had some responses to that conversation thread.
So I'm just I'll quickly touch on some of Ahmed's point and start with Stephen and Robley's point as well. I think generally, the VC model has its strength in Africa, but also some weaknesses. I think really the point that Stephen made on who are we talking about, who are we referring to? Yeah, so when we're talking about the entrepreneurs, last year we saw 1 billion and 270 million of funding going into startups in Africa, and this is data from Brighter Bridges and Maxime Bayen from Green Tech Capital. And we see the majority of funding going into these companies are VC funded, and clearly it's working for some companies. I think the way VCs are set up is that these capitals go to these companies, but the challenge that we're currently facing, I guess, is what we're talking about, the issues around funding local founders, and issues around also funding some minorities such as women, for instance. We certainly need local capital to address some of these challenges, but generally these models are working for companies. We're starting to realize some exits, some acquisitions on the continent. But when we look at, for instance, fund managers, I think the VC model has been fairly difficult. As Stephen highlighted, I think there are challenges around deal flow on the continent. There are challenges around, there's still some exit constraints as well. The cost of managing some of these funds are pretty high in Africa. But generally, there are other options that we can explore. If you talk to any VC on the continent, you realize that they're also business mentors, they're also venture builders. And so I think it's the way we think about it. It's not a cure-all, as Ahmed said. There are other options, and which I think will be worth touching on this call as well.
And there's a question, and Stephen, I'm glad you're jumping in on here, from Leah Maka, on whether anybody in this panel has figured out a way to incentivize Kenyan high net worth individuals to invest. Or are they still too comfortable with their bonds and their land? What would it take for Kenya to have an influential network of indigenous investors like Nigeria does?
Yeah, I mean, thanks, and that's a good question. But I also wanted to comment on something that was said earlier around just the VC model itself, and maybe it's good to also put this into context. The VC model, if I look at in Kenya, and Kenya is one of the leaders across Africa in terms of venture capital, private equity investing, and so forth. You're just having the first bunch of private equity venture capital funds clocking their first 10 years, which means that this is when they're exiting. So, it's not a model which has been tried over 50 years. So we are still learning what works and what doesn't work. So it's good to put that into context. And I would bet that apart from maybe South Africa, Nigeria, and Egypt, across Africa, you don't have as many VC funds that have gone through one whole cycle for them to figure out what the key issues are in this case. But the challenges are there and they need to be addressed. On the issue of getting local investors more actively involved, that's a journey, right? There's a lot of work that needs to be done there, and we've been doing that work. There's a lot of, first of all, just education. I'm part of the Africa Business Angels Network, and one of the key things we've really pushed on is just to, first of all, educate. How do you evaluate a startup? What's the trajectory of a startup? If you're going to put in cash as a first investor, do you take 50%? Do you take 20%? How does that look like? And we forget that is most investors coming from traditional assets are very traditional in terms of how they view sort of like investments. So that's going to be a journey. In Kenya, what we've done is we put together an angel network. We have 40 angel investors who are part of our network. They're not as active as we'd like them to be, but I guess the first stage is, are they learning? Have they committed some resources? Are they looking at deal flow? And once they're done with that part, then they can start making investments. The beauty that comes out of even the crisis that we've just had around COVID is that people have realized, these so-called stable asset classes are no longer as stable as they used to be. Real estate has tanked, the stock exchange has tanked, and so forth. So you're having more people now starting to make inquiries around, what was that thing you're telling me about angel investing at this point, which is a good thing to a certain extent. The last bit is for this to actually work, while angels are critical, we need to get pension funds involved. You need to get institutional money like you have in Egypt, in this case, involved. And the challenge is that trustees and pension fund managers are now putting money. If I look at Kenya, the statistics are just around 2% of the total allocation that pension funds have been given by the Capital Markets Authority to put into alternative asset classes is currently being deployed. And so you can tell there's so much work that needs to be done. And I would bet that if you go across the continent, that's the same discussion. And so there's much more that needs to happen, but it started at least on the angel front. And I'm hoping that then keeps moving over a period of time.
And we are seeing more and more activity throughout the continent with angel investing, and not just classic VC, but the filling out the gaps in the ecosystem to make VC work in Africa. So I think that's a good thing. Brenda, I want to go back to something that both you and others have mentioned, which is around SMEs. And there's in my mind a massive need in Africa for financing for SMEs in particular, ones that may not be massively scaling, but have an incredible economic impact as an aggregate, and really don't have a way to find financing today. Do you have thoughts on that? Do you have alternative models? Maybe Robley, you can jump in on this. Are there alternative models that perhaps are better for some of these type of companies? Because everybody just defaults to VC, which I don't think is correct, right? VC isn't the right model for every kind of company. But how do you address that with, a small business that needs $100,000 in capital?
Yeah.
And by the way, this isn't just for Brenda. Anybody can answer this question.
Yeah, so definitely. Cool. So definitely, as you said, there are a lot of businesses in Africa which have been successful and they did not get VC funding. So there's definitely other options that exist out there. And for instance, we have organizations which offer milestone-based grants, like the GSMA, which Sam is part of. And this has funded a lot of startups on the continent, which have gone on to raise VC funding later on. We also have crowdfunding as an option. Like for instance, there's Enda from Kenya, which crowdfunded to do like the first model of their shoe, and they've gone on to raise VC funding. We also have accelerators and incubators, which some do provide funding and also do provide some provide grants, which could be from DFIs. They also provide, like competitions, which have like a prize, which the startups could then go on and use that money. We also have people like Untapped Capital, who provide asset-based financing. So it's not just about VC money.
Thanks for the plug, by the way. We didn't pay you to do that. Yeah, thank you.
Yeah, I was not paid. Yeah. So definitely there are other many options that exist out there apart from VC funding. I'm sure the other guys on the panel have interacted with different options, so I'll let them speak more to those.
So yeah, I'd definitely like to chip in here. I mean, we have to understand the VC model is equity based, and a lot of times they're investing early pre-revenue, so the risk is higher. And so the expectation for returns, to meet the investor returns, they really need to get 1 or 2 big wins. And so it's a very risky model, and it's worked in the US. There's a big question whether that numbers can be met in Africa. For me, one of the things I looked at as an entrepreneur here and trying to get into Silicon Valley and failing was, can I emulate other companies that have been successful outside of Silicon Valley? And for example, there are 2 companies which I do a case study on, is MailChimp and Atlassian. These 2 companies, they're pure software service providers, and they reached $1 billion of valuation with 0 VC funding. The technology at this time, cloud-based computing, makes it very cheap for people to get products out in the market for very low. So there is a need of focus to strengthen those skill sets for bootstrapping. But beyond that, what we're looking in the US, Lighter Capital is doing and very good with revenue-based financing directed to and tech entrepreneurs, and they do like a 3x return, and they can lend you up to 3 months of reoccurring revenue. So you have to be revenue positive. So in any way of getting entrepreneurs to revenue positive and then figuring out how to finance them is a good way to lower the risk and to clear out the requirement that they need to be at a 10x. Investors can come out at a safer way by maybe a 3x, because they know they can rely on some revenue-based financing. Another interesting example that I've been seeing in Minnesota is a company called Tiny Capital, Tiny Seed, and they do equity-based financing, but they only focus on SaaS companies, and you have to be close to revenue positive. And the deal with them is they get their return on equity, on dividends. So anytime the entrepreneur wants to pull out money, they also have to pay Tiny Seed some. So there are a lot of kind of combination of debt and equity. There's a lot. What is missing is innovation in the financing of startups.
All right. So now I need to make a plug for Untapped Capital, because I think that, and please, I'm just going to put a plug in here, because yes, no, I mean, I want to highlight your revenue sharing concept. I mean, there are innovative ways or innovative things you can do to help finance that is not purely capital blockbuster based, right? And, at Untapped Capital, that's exactly what we're trying to do. And we're trying to focus on, SMEs that aren't, the right kind of companies for venture, but have a huge impact on African entrepreneurs and the market in general. plug stopped. So Ahmed, yes, please, over to you.
Okay.
So since we're plugging, I actually want to answer Daniel Nolan's question with a plug, okay? And it's how Western entrepreneurs get better funding because they have more access to VCs. I agree, that's a problem. I've been ranting about it for years. And I think that if all of us support forums like this can migrate to be a monthly pitch session for selected entrepreneurs from the region, right? Because I don't want to set one up for my portfolio. I want one to be for the region, okay? And then if we actually have the resources, somebody can say, you know, I would really love to have Intel hear my pitch. And then on the other side, somebody contacts Intel and says, just watch this. And after the first few times, this session becomes so popular that those people just tune in. All right, so that's what I'm hoping that Jim and Nest migrate to. And if we all support it, that's really kind of my dream of how to give these people access out and neutralize that advantage or disadvantage that we have.
Can I give you a call after this, Ahmed?
I'm happy to. I'm telling you, I've been ranting about this. I've asked the IFC to sponsor this. I've asked the US State Department to sponsor this. As many people as I can to sponsor something like this, because I really, truly believe that it's a
fortunately for us, we can just do this. So we're just going to do this.
Exactly.
So great. Wonderful.
Another point, the debt point. I'm going to ask one of the people on my team to put a link, an article I wrote a few years ago about why debt is absolutely the wrong model for innovation. Because when you take risk and after you have debt, that's a path to death. You should take our equity money and lose it. And then you can innovate and take risk, because we want you to take risk and push the boundary. But if you take debt, your mandate, if you take debt, is find the 100 guys who did the same thing before you and be number 101, repay your debt.
Yeah.
All right. So I would, again,
fully agree.
Jack, you're on this call, find that link and put it into the chat. Okay. And then the last comment is about, somebody mentioned women entrepreneurs. The most successful accelerator in attracting smart female founders was in Saudi, which surprised everybody, surprised the heck out of me, right? Because they didn't have opportunity in society for real jobs. So we got the cream of the crop. I think 40% of our startups in Saudi had female founders.
Wow.
Right? Higher than any other country, and I'm sure higher than any accelerator that's gender neutral in the world. Right? So I'm just really, really fascinating that the societal pressures, and we created an opportunity. So by creating an opportunity, maybe that's the, we have to have just the open door.
So what you're saying is that somebody needs to start a VC fund for women in the Middle East.
That would be awesome. There's a couple of angel networks that do that. Okay. And I think that would be awesome. I think that we need a corrective bias.
Yeah.
Right.
That gives me an idea for another Nest session. So let's have one about female founders in the Middle East for the Nest one of these days. That'll be really interesting. Stephen, I know you've been patiently waiting, so I'd love to hear what you think.
Yeah. So I want to take it back to the SME investing and the tools to use for that. So I've been fortunate enough. I used to represent a fund based in the Netherlands called In Return in East Africa. They had a portfolio of 7 SMEs that invested equity in a number of them. And I remember trying to exit those deals, which was so painful. We did exit a couple of them, but it was a very painful process. But one of the things that I learned, and I think that's relevant here, is that we just need to tweak that VC model to a certain extent, because we have a company like Centum in Kenya, which is a listed quote unquote private equity, but evergreen private equity fund that has been very successful buying SME type companies using equity, but then, having the luxury of waiting for 10, 15, 20 years and really growing that company and exiting at very good returns. So it's not that it can't be done, but you have to tweak the model to be able to respond to the situation. And the challenge, as I mentioned earlier here, is the fact that you're picking very early stage companies that need a bit of time for them to grow. if you pick a company, sort of like you put in $2 million, $3 million, if you want to exit that in 5 years' time, and it's an SME, it's probably grown, I don't know, 2x or 3x. It's still yet not big enough for a big private equity fund like Actis to be interested. But if you wait for that 10 years, 15 years, it's a big enough ticket for people to be interested, for you to exit and for you to generate very good return. So if you twitch that model, it does work for SMEs. But as mentioned, there's also other solutions that work very well.
Go ahead, Sam.
Yeah, so there are other solutions in addition to what you said, Stephen. I think venture building is another model. An organization called Green Tech Capital, they have this equity by results model, which essentially what they do is they don't make cash investments. They support this company by helping them build. So they mutually agree on the KPIs to meet, for instance, at the end of the year, on X amount, what they agree on what targets to meet. And this is a model where I think could be effective for SMEs to help SMEs actually reach particular targets. Another model that we've seen at GSMA is actually corporate venture capital. Safaricom being an example, launching a CVC fund where they're supporting startups. And actually, when they started the second phase, earlier this month, but the first phase has funded some brilliant startups within Kenya. Sendi being an example, and Neza Education being an example. The model GSMA uses is more of the smart grant funding, or more of KPI based funding, which has really worked well with companies that are not particularly, they're seeking 100,000 to 250,000 pounds. And we have several funds in the pipeline. I'm happy to share more information on that. We have an assistive tech fund running at the moment, which I'll share in the chat for everyone.
Oh, great. Thanks for that. I just want to relay some comments and questions from the audience. Mutabazi Jeffrey says, I think most VC investors come to Africa looking for Silicon Valley type businesses and business models without considering the fact that the problems in Africa are mostly basic and don't need the complicated type of solutions they're used to seeing dominating VC rounds in Silicon Valley. And also another from Katrina Sheridan, that African SMEs and entrepreneurs say they are concerned about being fleeced by taking on external equity. Many just need working capital for a period of time rather than large amounts of money. I think two very valid points. What problems are we solving? And maybe I'll switch the discussion here a little bit. So what kind of exits are actually available for, for African VC companies? Do we have the right exit markets in Africa? Is this I think Stephen, Sam, I think it was you, Stephen, mentioned that we're really just at the end of the first cycle of VC in much of Africa. Well, are we going to see, whoops, sorry, no IPO, no M&A? Ahmed, please.
So I'll answer all three questions very, very quickly.
Yes.
Somebody mentioned that, taking 7 to 10% of a company for $20,000, $30,000 on an accelerator is too much money, et cetera. If it was, it would rebalance. We have a high failure rate, and the VCs are taking risk. If VCs start making inordinate returns, then you can say VCs are undervaluing companies. On the flip side, I think we're looking for home runs. M-Pesa is a home run. You have transformational companies that go from 0 to $1 billion. There's a company listed. So answering your other exit question, listed on the Egyptian Stock Exchange that my partner funded 15 years ago from a prior fund, okay, that we both worked at, but my partner actually did all the work. That's now a $1 billion company. It's a listed unicorn called Faudi, right? $1 billion valuation in an Egyptian tech company that's 15 years old. So we're not getting the quick J curve, but it's getting there, and there will be more exits. And now that people have seen that a funded startup can get to $1 billion, the individuals and the high net worth individuals, they're going to step up, because the way to make money isn't just to build a cement plant or a tower, right? wow, there's money to be made here. And greed is going to motivate that capital to flow into the market and fund more smart entrepreneurs.
I like that. Greed will drive the way. All right, Robley.
So, I mean, what I would say is we have 10 years. I don't think we can count the successful exits in two hands. And I think you bring up a very good point. Is in the US, there's a lot of exit ramps. Yeah. So one of the big issues in the US, actually, people like me have brought up is a lot of VCs look to corporate companies like Microsoft and Facebook as exit ramps because they have this huge cash reserves that they need to find. But what it has resulted in is a consolidation of products. Yeah. So now we are fighting kind of these big and these antitrust movements going on to break up this company. In Africa, it's a different thing, and that's why and it's logical to say, hey, be open-minded and say what are the other alternatives, like Stephen say, even if you're stuck with VCs, how can we make it more and work for Africa, even from an exit perspective? But for me, I see this conversation is a conversation about 1%. We need to be talking about 99%, and 99% are not unicorns. They are zebras.
Okay. We need the zebras.
Just to weigh in on the exit question. So I guess it also depends on the markets that you're looking at. If you go to markets like South Africa, Kit of Knife Capital did a very good presentation, I think in 2019 at the Africa Early Stage Investment Summit hosted by Eban. And he spoke about his portfolio. And I think he's on his second fund at Knife Capital, and they've probably exited 10 companies. And of all those 10 companies, if I'm not wrong, a majority, almost 90% of them have been just trade sales. And that's where most people are going to be exiting. You know, the examples of companies that are going to the stock exchange and listing are very few and far between. Like in Kenya, of all the startups that have been founded, I know, people speak a lot about Kenya. I think there's only one, to my knowledge, that has listed, and this is Mdundo, which listed, I think, last week. And it didn't even list in Kenya. I don't know if it was in Norway or one of those countries, just one that has listed. So IPOs are going to take a bit of time before they develop. And I think there's some research that's pointing to the fact that you're not having as many companies that are listing. The pace of listing companies in the stock exchange has actually decelerated over time. So I think trade sales is the way to go. The only question we need to ask ourselves is whether our corporates are willing and ready to make these kind of acquisitions. Because I see a lot of acquisitions from outside, but our corporates, there's, Safaricom should be gobbling up quite a number of companies, but they're not. What they're doing in such an instance is calling people into a room, listening to the different ideas, and then sort of like just saying, okay, you know what, we're going to do it ourselves, right? So I guess it's also a cultural shift that needs to happen to have corporates gobble up companies to create that exit market.
There's another question from Saloom Awad. Where does crowdfunding play here in terms of a model? Anyone have any thoughts on that? Or Sam, did you have a thought on the previous topic before we jump into crowdfunding?
Yeah, I can quickly touch on that and maybe touch on crowdfunding as well. I do echo that point that I think IPO are becoming less attractive, not just in Africa, but also globally. If we see what's happening, where I think the model, startups are starting to really lean towards corporate acquisition. And I think going forward, partly what we need in Africa is for startups to work with startups. So the mergers, we need to see more mergers happening. Several fintech companies out there, several health tech companies out there, working across regions. And I think when you start pulling the expertise and actually resources, human resources across the continent, I think we will be able to actually build companies that really can stand the test of time. And then we can start talking about acquisition from corporates. And I think that's kind of the missing link at the moment. I mean, when we look at more companies, I think acquisition and mergers and acquisition will be the route to go. On crowdfunding, I haven't really seen a model that works very well in Africa. I think right now we're seeing more of sort of community capital coming in. We're seeing more of the rolling fund, conversations around rolling fund. There's an Inkali fund running in Ghana and Nigeria about to kickstart. Whether or not those will be successful is questionable, but they do have potential. But I think the other path, which could be crowdfunding, is exploring the diaspora and tapping into the diaspora and to invest in African startups, and I think there are huge opportunities there.
Jim, I just want to add, I want to caution with the corporate acquisition. For us here in the US, we're definitely seeing the disadvantages of having a Facebook, for example, on multiple social networks. Yeah, we are seeing the disadvantages of Amazon playing as the market and a market participant, and so it really perverts the market, the free market economy, and deny and limits innovation. And we see that also in Kenya. So I do not want a situation where Safaricom is gobbling up every innovative company. What I want to see is companies disrupting and fighting against Safaricom. And there's also, I hear little talks in Kenya as well on whether, we should break up Safaricom into multiple pieces, because I think those monopolies are not good for free markets.
Sure. I mean, I think most would agree that monopolies aren't necessarily good, but a route to an exit, going back to Ahmed's statement that greed leads the way, I think at the end of the day, entrepreneurs need exits and so on.
I didn't say
Go
that.
ahead.
I said
that.
Greed will motivate fringe players to come to the market that will expand the pool. By the way, I just posted a link. 35% of exits in the US in 2018 were to trade sales. 22% were IPOs.
Right.
And then it goes down from there.
Right. Then again, the IPOs tend to have the biggest returns, the biggest multiples on the returns. So anyway, but yes, thank you for that statistic. That's very, very, very useful. Okay, well, we're getting close to the end of the hour. So, before I ask for last positions, last words, last catchphrases from you guys, I want to thank you all for joining this call and the audience as well. We welcome crowdfunded ideas on what the topic should be. So please send us an email, info@findthenest.org, and let us know what your ideas are for good topics for NestCast Live in the future. And on that note, any last words for an interview on whether the VC model is the right model for Africa, or what models might be better? Anyone?
Please share the article that Jack put on here that I wrote a couple of years ago. It summarizes my whole argument.
Okay, I'm looking for it now. I'll find it and we'll make sure. Jack Schroeder, got it. We'll make sure that we get that on there.
So maybe some thoughts.
Go ahead, Sam. Go ahead.
Yeah, maybe some thoughts. I think that the VC space, the investing space in Africa for tech is still at a really early stage, and I think these models will evolve over time to what works for us. The more that we see more successful entrepreneurs that become angel investors, the more that we see innovation happening on the continent. I think increasingly we will see these models change to what suits Africa best. But I think that we have some things to be happy about. We have some successes, and we can really leverage on that going forward.
Thank you.
I would like to say, we should not be confined to dogma. We should be very kind of open-minded to look at other opportunities and how we can democratize the process of innovation. And so that is my message. It's like, don't be confined to what has previously worked. Let's open it up and think outside the box. And aspire to be a zebra, which is a real animal that can coexist with other zebras and provide value to its entrepreneurs in a decent return.
Can I supplement Roble's comment
please.
and say, democratize the opportunity for innovation, not democratize innovation. Democratize the opportunity to innovate for as many people as possible.
You're right. Thank you for the correction.
Maybe for me, just two things. One, I've just posted the article that we did a couple of years back, which talks about whether there's a right fit of venture capital, private equity, especially in East Africa, but I think it's applicable across most African markets. So feel free to have a look at that. I think my parting shot is to solve all the challenges we are sort of like speaking about, we have to build the ladder, right? And we need to start very early. Before VC can work, it needs to get the right pipeline. It needs to have the right entrepreneurs who understand sort of like selling equity really early. It needs to have the right angel investors who sort of like create these linkages. Because I think if you move up the ladder, there's already private equity, there's stock exchanges and so forth. So the idea here is we need to have more angel investors. And anyone who's on the call, you know, most of the African countries already have angel networks. I think there's over 64 angel groups that are part of ABAN. So look around your city to see what's working and sort of like just jump in and start making investments as an angel. Thank you.
And join the nest.
And join the nest, sorry.
Sam?
No, those were my final words. Really enjoyed the session. Thank you all very much. Learned a lot.
And Ahmed, any other catchphrases that I can misquote? Oh, no, great, wonderful. Well, once again, thank you everybody for joining this week. Oh, Brenda, yes,
Brenda.
Sorry, Brenda, I didn't see it.
Sorry, no worries. So I think my parting shot will just maybe to build a little bit upon what Stephen shared. We have entrepreneurs, we have investors, but what we've seen a lot is most of the time when investors are speaking their language, when you say product market fit, value prop, you know, your unit economics and things like those, entrepreneurs are not usually on the same page. And so, shameless plug, I Village Capital, we've developed a framework called Viral, which I've just shared on the platform. Sorry, on like everyone on chat. So if you don't have a chance, please have a look at it. And if you have any questions, feel free to reach out to me.
Great, thank you very much, Brenda. Thank you.
By the way, if any of you want to invest in Egypt, ping me, okay? Happy to help anybody that wants to invest or do any work in Egypt, Tunisia, Morocco. That's kind of our marketplace for now.
Great, thank you very much. Thank you everybody for a great session, and just a quick announcement for next week. Next Wednesday, not Thursday, we have a French Nest, same time, with two great companies. And on October 1st, Thursday, and on October 8th, Thursday, we have a couple more fintech startups and a number of interesting companies. So please join us in the future for the Nest, and I hope to see you in the following weeks. Thanks everybody. Thanks for joining us.